name is John from Westlake High School. Today I'll be presenting my equity research on Akeso, ticker 9926 on the Hong Kong Stock Exchange, which is a biopharmaceutical company I'm recommending as a buy with a price target of 160 Hong Kong dollars, with a 56% upside from its current price of 102 Hong Kong dollars. Akeso is a global pharmaceutical company that is currently led by Dr. Michelle Xia, who brings decades worth of drug development experience from Pfizer, Bayer, and PDL Biopharma. The company currently specializes in bispecific antibodies, which are molecules that hit two disease targets at the same time rather than just one, like traditional cancer drugs. Their two flagships are ivonescimab and cadonilimab. In the Harmony-2 phase 3 trial, ivonescimab reduced progression risk by nearly 50% against Keytruda, which is currently the flagship cancer drug. And beyond these two flagships, Akeso has over 50 assets in development across oncology, autoimmune, and metabolic diseases, which were all built using their proprietary tetrabody engineering platform and their vertically integrated manufacturing system. Now, globally, Akeso's commercialization is powered by Summit Therapeutics, which is a US-based partner with exclusive rights to sell ivonescimab in the US, Europe, and Japan, and currently has collaborations from Pfizer and GSK, which are well known. The global oncology market is projected to exceed $38 billion by 2028, and the bispecific antibodies are one of the fastest growing segments. And in the US market alone, the bispecific antibodies are expected to reach $25 billion by 2030. Three forces drive this rise. First, there's rising cancer incidence rates, which increases demand for next-gen immunotherapies. Second, Keytruda's patent expires in 2028, creating a massive market vacuum. And third, which is very important for Akeso, China's NRDL added ivonescimab in January 2026. The NRDL is China's National Reimbursement Drug List, which is basically the government's formulary. And once a drug is listed, 70 to 80% of the cost is government subsidized, which dramatically expands patient access. For Akeso, this grew the addressable patient market by roughly 300 to 400%. You can find the calculation under my appendix. I think it's roughly around index 30. It's an image. So let me walk through the two flagship drugs. Ivonescimab, or AK112, is a bispecific that blocks two cancer pathways at the same time. In a publication that was published by a reputable source, The Lancet, it achieved 11 months of median progression-free survival versus just 5.82 for Keytruda. On the regulatory status, so that's basically like a 50% improvement in overall in survival. On regulatory status, China's NMPA, which is the National Medical Products Administration, which is the Chinese equivalent of the FDA, approved the drug in January 2026. Summit has filed a BLA, which is a biologics license application with the US FDA, which is basically requesting formal submission to sell ivonescimab in the US. This decision is expected by November 14th, 2026, and approval would open up the US, which is the world's largest pharmaceutical market. Cadonilimab is the world's first approved by PD-1/CTLA-4 bispecific, and it's also Akeso's primary current revenue source, with over 2 billion RMB in 2024 sales. It's currently approved for cervical cancer, expanding into gastric cancer, and also included in the NRDL, which is driving hospital uptake in China. And there's also AK139 and Umokimab, which are two different non-oncological drugs, which represent independent revenue streams that diversify away from oncology. Now, on the financials, Akeso reported a total revenue of 2.1 billion RMB for fiscal 2024. First half of 2025, revenue surged 37% year over year to 1.4 billion RMB, with product sales up 49.2%. Revenue is forecast to grow at a 30.2% CAGR through 2028, which is roughly double the broader biotech growth rate. The company currently holds 7.8 billion Hong Kong dollars in cash, which is over 24 months of runway for the company. Net losses have been narrowing each quarter, with analyst consensus pointing to a break-even profitability by around 2027. Capital allocation is pretty disciplined. Summit's $500 million in upfront licensing provided needed non-dilutive capital, which reduced the need for further equity raises. Now, to arrive at the $160 target, I built a DCF using the 30% revenue CAGR, the EBITDA margin expansion from 20 to 45% by 2030, and a 9.7% WACC. And after applying the terminal value and adding in that cash, the DCF yields a fair value of 160. I also wanted to, a DCF is kind of overly reductive for biopharma, where outcomes are pretty binary. So I also ran a Monte Carlo simulation using geometric Brownian motion. That is Appendix 51, which modeled 10,000 randomized price paths with a 20% volatility. And the mean present value that it gave me was 159 Hong Kong dollars, which validated the DCF value and had a 95% confidence interval from 105 Hong Kong dollars to 231 Hong Kong dollars, and a positively skewed distribution, which signals that there's a greater upside probability than downside. But both models converged around the same target, which gave me confidence in the recommendation. Now, this slide summarizes Akeso's competitive moat. They're in mechanism, they're bispecific versus monospecific. In clinical performance, 1.11 months versus 5.8 months, which is a 49% risk reduction. In market timing, Akeso is well positioned to move into the 2028 Keytruda patent cliff. In global access, Summit insulates Akeso from the Biosecure Act, and in platform breadth, 50 plus assets. Akeso has 50 plus assets compared to most competitors just focusing on a single asset. Akeso does trade at a premium, 22 EV to EBITDA and 1.3 or 13 price to book, but this premium is justified by the 30% CAGR, their first-in-class assets, and their de-risked global pathway. Now on to risks. First, there's FDA regulatory uncertainty. The BLA has been filed, but a complete response letter, which is basically a rejection requesting more data, is possible. The mitigation is the phase 3 data and existing NMPA approval providing precedent. Second is geopolitical risk, because the Biosecure Act may restrict Chinese biotech. Akeso also mitigates this because Summit holds all non-Chinese commercial rights because it's a US entity. Third is NRDL pricing pressure. Government mandated price cuts could compress the margins for Akeso, but historical precedent shows that volume gains consistently offset reductions for drugs in China, especially with the 70 to 80% subsidization providing more adoption. Fourth is the complete reliance on Summit for US and European execution. If they fail to deliver, Akeso can't really do much. Now, onto AI's role. AI is reshaping biopharma, Akeso, and Akeso is positioned to benefit. AlphaFold 3 predicts complex protein structures in seconds, which is work that traditionally takes years. On the clinical side, AI models can identify optimal patient populations and reduce trial costs and improve success rates. Briefly on ESG, Akeso prices antibodies at significant discount to Western competitors, and they make it accessible to a public hospital system in China. Environmentally, they've committed net zero carbon by 2040. On governance, they're pretty clear. They have nearly 80 research findings in 2024. They have partnerships around the world with reputable companies. Our recommendation is a buy at 160 Hong Kong dollars, which is a 56% upside.